Today, I'm going to talk about a very concerning trend in crypto, which I think threatens the essence of decentralization. There was a massive story that broke overnight. Not many people are talking about it. I did a thread on it last night, but I want to go deep into LIDO, into Stake ETH, and look at some of the manipulation that is happening to the LIDO DAO and what it spells for crypto as a whole going forward in terms of sticking to the essence of decentralization and what DAOs are actually supposed to do. And I think it could have ramifications for the LIDO token itself. And of course, LIDO is one of the biggest beneficiaries of the ETH token with the ETH merge on the horizon. So I think it's a very relevant discussion to have today. But just before we have that very important discussion, I want to look through what happened overnight, which was actually the Alphabet and Microsoft earnings. Now, we all knew that we have a lot of big earnings this week, and the real big day started today with Alphabet and Microsoft. And Alphabet actually missed on their earnings and revenue for the second quarter. So, a lot of people were saying that if they missed, this would spell disaster potentially for the crypto market, for the stock market, etc. But they actually missed on their earnings and revenue for the second quarter. So they reported earnings of $121 per share versus an expected $128. The company fell short of revenue expectations for advertising and Google Cloud, and they lost about a quarter of their value this year. And then Microsoft announced their earnings, and they also came in a little bit flat. But very interestingly, they actually rallied afterwards. Like, we could see Microsoft straight after earnings, basically the very next candle after earnings, they printed from 250 to 266. Google, even though we just saw they missed their earnings, they printed from 104.50 back to 111. Why is this the case? Why would they pump after their earnings are down? I mean, this is, not even in line with investor expectations. Well, one simple reason: markets hate uncertainty. Markets don't like not knowing what is forthcoming in investment markets. Markets do not like the fact that they don't know what is happening in terms of an earnings report, because a lot of these companies, although public sentiment gauged the price to some extent, they didn't have a full idea as to what extent earnings would be hit, which is quite scary, especially with COVID interruptions, supply chain issues, etc. Advertising budgets obviously being slashed. A lot of people did not know what to expect this quarter. So the markets reacted accordingly before some of the earnings, just to de-risk a little bit. And personally, I think if you're an investor, it'd be stupid if you're not holding enough cash not to de-risk a little bit. So it makes a lot of sense why we did get this bounce, because although Alphabet and Microsoft missed earnings, they didn't miss by a huge margin. They only missed by 5 to 10% of their expected, which isn't a massive knock on either one of those companies. So that's one of the reasons that is the case. But earnings, although it is crucial as investors to take that information into consideration, and it gives us an insight into the health of the overall economy, there are much more important dates this week. The first of which actually started today, which is the FOMC meeting. Obviously, that will dictate to what extent that the Fed actually raises rates. So we are expecting a 75 BPS hike, 75 basis points. If it was 100 basis points, that would be probably very disastrous for equities, crypto included in that conversation. And if they raise less, let's say 50 BPS, which I think is almost impossible, then obviously that would be great for crypto. But the likelihood is that it's 75 BPS. And if the likelihood is 75 BPS, I think I have a sneaking suspicion that maybe we get a tiny bit of a rally if that is the case, because the markets are still pricing in a 22% likelihood of a 100 BPS hike, and then a 78% likelihood, based on the latest data that I saw this morning, for a 75 BPS hike. So that would eradicate a little bit of uncertainty. So I guess, rate hikes are never great for crypto because they don't operate that well in a high interest rate environment. Cryptos operate better in a low interest rate environment. But if we're picking from the best of a bad bunch, then the 75 BPS hike is what we want as investors. So that is the big announcement that we have roughly in it's in like 24 hours, I believe, or it's later today. I think it might be in 15 hours, around 15 hours from the exact time now. So if you're in America, it'll be tomorrow. If you're in Australia like me, it'll be overnight. It'll be like much later tonight, like 3 a.m. Australian time tomorrow. So that's when the FOMC meeting actually announces, but they have already been sitting. But obviously, when Jerome Powell speaks, that's when the market moves. That is when we want to be paying attention. Then we have Facebook earnings coming out. If we can take anything from Alphabet and Microsoft missing, I think this date is now a bit of a nothing burger. The FOMC definitely takes precedent over Meta. And then we have a very big day on July 28th, which I think will be even bigger than the FOMC, and that's the US Q2 GDP numbers, which obviously will confirm if we're in a technical recession or not. Of course, recession is a bit of an arbitrary term because it's very subjective. It is not really an objective measure for whether we are or are not in a recession. Obviously, there's technical terms we can use, but this will give the market a little bit more of an insight as to how deep the problem is, how systemic the issues are to do with labor, to do with GDP growth, and we'll get a much more insight into the figures on that date, which is coming in roughly 40 hours. So obviously we have Apple earnings backing that up as well. Apple's the biggest company on the Nasdaq, so I think that is the Apple earnings are much bigger than Microsoft, much bigger than Google, much bigger than Meta. So those ones definitely take precedent. So yeah, a lot to look forward to or be fearful of this week. It's going to be a very, very volatile week, but the price has actually bounced slightly if we look at the Bitcoin chart. And we actually hit this trade on my Instagram live yesterday. So you guys know after every live stream, I go into Instagram for a little bit and trade with you guys and look at setups. And we actually hit this nail on the head. So congrats to everyone that actually got on this. I think our entry was 20,800 with a stop at 24.5. And we got a pretty nice bounce, a pretty significant bounce from our entry of roughly 2%. Which was a nice 20% move with 10x leverage. Now, obviously, the leverage you use depends on your risk tolerance, etc. But we always knew that this yellow zone was quite strong. So I am expecting this to hold a little bit longer. This is quite a strong box. We also talked about yesterday the possibility of this green box holding. Obviously, it didn't. And it was a very clear sign that we were coming down to the yellow as soon as we closed on the 4 hourly above this, below this, sorry. In fact, if we look at the 4 hourly, we can see that we had two closes below, which resulted in us hitting this second pocket of liquidity, which is this yellow zone here. So what am I seeing for the Bitcoin price? Well, if we can hold the yellow zone, then it is likely that we can have a little tiny relief bounce to 21.7. I think that's definitely possible. We have the 3 EMAs. So these are going to be very, very hard to break through. This is one of the reasons why I think it'll be difficult for Bitcoin to come back to the 22 to 23 region, because you've got 3 EMAs, the 50, the 100, the 200 on the 4 hourly. And you've also got this major resistance zone, which is between 21,500 and 21,955. So you kind of have 4 points of confluence, which are going to make it very, very hard for Bitcoin to actually get any momentum here. But a short-term push-up will provide a little bit of relief for what I think probably leads to another leg down. Now, the next leg down likely will come back and test this yellow zone. If we don't hold this zone, then we know that 19.3 to 19.7 is definitely on the cards. That is the next range, and that would be indicating that we're heading down towards range lows. Gareth Soloway was on the show 2 days ago, and he said that 21,800 was his invalidation. It's this level here. You see this range, this horizontal ray at the top of my green box. That was his zone for invalidation on the bullish scenario. So what he wanted to see was he wanted to see Bitcoin come down, actually test that zone, and then successfully bounce, and that would be a bullish continuation. However, we didn't get that. We actually broke through that zone, which was an indication for him to personally flip bearish. And when I'm trading, that was an indication for me to also flip bearish, at least in the short term, because there is a high likelihood chance now we come and test these lows, or at least test the 19.5 liquidity zone. So I am very cognizant of the fact that we can go back down there, which is why I'm not going crazy on longs, because our long scenarios did rely on us holding 21.8. Obviously, going down to 20,800 wasn't the greatest scenario from a long perspective. So I did flip short and did very well on the ETH short. I also talked about this on yesterday's show. This is my Ethereum chart. Obviously, Ethereum leads all the alts right now. That is the real one we have to keep our eye on. We saw we had this channel here, this pennant formation that we broke out of on the rejection of the 200 MA and in confluence with the retest of the horizontal support here, or the diagonal support here with the sloping channel, which you can see if I zoom out a little bit. That was an indication to take some Ethereum shorts, of which I did. And I also said that was an option for you guys on the show, a higher risk option for you guys on the show yesterday, and we did quite well on those shorts. Unfortunately now, or fortunately for those who took profits, we are getting a little bit of a rebound. Always wise to take profits at this next horizontal ray, which is a very strong level of support and resistance at the 14.2. So that was a good profit-taking zone. I actually shorted this zone as a little bit of a scalp trade with a pretty tight stop above at 14.44. Took a nice trade down to 13.50. Closed half of my position. The other half closed a little bit further up. And now, we seem to be rallying again. So what do I see from the future of Ethereum now? Well, looking at the 4 hourly, this is a really, really key zone. And this is giving the Ethereum bulls a tiny bit of hope right now. It's that we get a 4 hourly close over the 14.20. We know how strong the 14.20 is. We seem to be printing a very large green candle. If we can close above that level, we did have a successful retest of the 200 MA, then that would be a sign that we can come back into this range. We can come back to 1533 to 1570, and then Ethereum can continue on its merry old way and continue to drag up the altcoins. However, there is a possibility that we don't flip this resistance into support, and that would result in further downside. So Ethereum does have a major decision to make now. Close above this 14.20, and I'm a bit more comfortable that we do get a push up to these major MAs, which will take us up to the 1500 region. Close below this, and I'm almost sure that we get further downside back to 12.50. So keep this as your major zone to consider, this major horizontal to consider. It kind of looks like a little bit of a Bart Simpson with a tiny reversal in the short term. So that's what I'm seeing for Ethereum. There will be trading opportunities off the back of this. We just need to see where we close on the hourly and the 4 hourly. The RSI is very high on the hourly, which makes me honestly not really want to take longs. On the 4 hourly, it's much, much, much lower. Looks a bit better. And then on the daily, we have quite a high RSI as well. So 2 of the 3 major time frames telling us that the RSI is at least ticking downwards. So we probably don't want to be looking at longs right now. At least I'm not. I'm probably in short mode at the moment. That's just how I'm personally looking at the market. But how you trade is completely up to you. So that's what I'm seeing on the charts. Remember, if you do want to trade, there's a link in the description to sign up for a ByBit account. You get a $4,200 bonus depending on how much you deposit. Very strong bonus for you guys. It helps support the channel as well, which we're very appreciative of everyone that signs up. And also, we 10x accounts live on the main show as well. So a couple reasons to sign up there. We help you, you help us, and we can continue to make great content for you guys, which is what I strive personally to do every day. And today's no different, with a massive story in terms of whale manipulation. So let's get into that. At the end of the show, I will switch the stream over to Instagram, because I'll probably want to do a bit of trading with you guys, look at some setups, but that could take hours on the YouTube. So I will continue with Q&As and trading after the show on my Insta. But before then, we have a major topic to discuss. And this is LIDO, staked ETH, and whale manipulation. Without further ado, let's get straight into it. Okay. LIDO DAO just rejected a $14 million deal with Dragon Cap, and someone is messaging me on Twitter, which is extremely distracting. Who is it? Oh, it's Thor. I don't know if you've ever seen his channel. But LIDO just rejected a $14 million deal with Dragonfly Cap. The deal was almost forced through by a mysterious whale who threatened to override the voting despite public outcry. With serious runway concerns brewing, what's in store for LIDO and ETH? Well, the first thing we have to discuss before we get into what's in store for ETH, if it could have a tangible effect, if LIDO could have a tangible effect on the Ethereum ecosystem, we have to go over what LIDO actually is and what it does and what it aims to achieve, because not all of you may know what LIDO actually does. So basically what you need to know is LIDO is a liquid staking platform. So if you go into lido.com, what you'll see, or lido.fi is the actual domain, you can stake Ethereum, Solana, Kusama, Polygon, Polkadot in exchange for a pretty nice APR. So on Ethereum, it's 4% currently, Solana 5.2, Kusama 20, Polygon 8.7, Polkadot 16.5. And what it does is you have one Ethereum, let's say, or one Solana, because Ethereum's not proof of stake yet, which we'll get into in a second. But let's say you have one Solana. What they're actually doing is they're taking your one Solana, so you stake it, you get staked Solana in return for staking your sol. Then they grab your original sol and they stake it in a validator node and they lock it up. So they actually lock up your tokens, and in exchange, they give you a receipt, which is staked sol. So you have a liquid asset, which is your stake Solana, but you're staking your Sol, so you're getting all the benefits of staking your tokens, but you're able to keep it liquid. So what liquid staking does is it enables you to keep your tokens liquid despite you having them locked up and actually earn extra yield on your tokens. Because since the staked tokens are swapped, so the staked ETH, the staked Sol, since they're swapped on DEXs, liquidity pairs are actually needed to offer liquidity for those tokens in order to facilitate swaps. So by you staking your staked Sol in LPs, what that enables DEXs to do is facilitate swaps, and you get rewarded with a percentage of fees and emissions for staking those staked tokens. So there's a benefit, which is, yes, you get the original yield of staking your Solana or your Ethereum, but then you also get a little bit of extra yield. And that extra yield comes from LPing or staking the stake tokens, which are essentially a receipt of your original stake token. So liquid staking is very cool because you don't need to lock up your tokens, especially in a bear market like this. There's a lot of concerns over locking up tokens because people want liquidity. And liquid staking basically bypasses this entire thing and enables you to retain liquidity of your assets while staking, which is a major plus for a lot of DeFi participants because no one wants to lock up their tokens in this kind of market. And why not earn some extra yield? If you're going to earn 14% from locking up, let's say your DOT for a year, then why not earn an extra 2.5% on LIDO and keep it liquid? And that's one of the reasons why the LIDO platform itself has grown so much over the past few months. So much. We could see, in terms of Ethereum TVL, which is 51 billion, we can see LIDO is the number 2 for TVL with over $6 billion worth of staked Ethereum on-chain, which is absolutely crazy. Like, LIDO is the second biggest TVL DApp out of the entire list. Above Uniswap, above Curve, above Aave, above Maker. So anything that happens to LIDO has a pretty substantial effect on the Ethereum ecosystem and the Ethereum narrative, which is why I think it pertains to most of you, because most of us are Ethereum holders, and most of us obviously are in crypto for, obviously, to make money, but also because of the decentralization, the benefits that decentralization offers, which I think LIDO slightly degraded over the last week, and I'll explain why. So it's by far the biggest Ethereum DApp with over $6.17 billion worth of assets deposited. 97% of LIDO's deposits are Ethereum. So I showed you it has Solana, it has Kusama, it has Matic, but 97% is actually Ethereum. $5.8 billion staked compared to $100 million on Solana. So LIDO is essentially an Ethereum proxy at this point because it's so Ethereum dominant. So the health of LIDO basically relies solely on the health of Ethereum. Now, with the Ethereum merge coming in the near future, LIDO is set to become one of the biggest beneficiaries because once the Ethereum merge is complete, Ethereum now moves to proof of stake, meaning you need to stake your Ethereum tokens in order to validate and secure the network. Right now, it's proof of work, so you mine, and that is how you validate the network. You mine Ethereum tokens. Soon, it's moving to proof of stake, so you need to stake them to validate the network and receive Ethereum tokens as a reward, which will increase, or the speculation is will increase demand for LIDO to use LIDO because more people will want to stake their ETH and more people will use liquid staking because not everyone will want to lock up their Ethereum. And that's a totally reasonable expectation to make in this market. But LIDO is set up as a DAO, a decentralized autonomous organization. What this means is that governance power is distributed amongst holders of the LIDO token itself. So token holders can participate in governance votes to improve the protocol. Whenever LIDO wants to improve the protocol, change their fee structure, dictate where they're gearing fees, where they're spending funds from the treasury, then it goes to a vote, and token holders of the LDO token, which is this token, are the ones that have control over the LIDO protocol. So yes, LIDO is a staking protocol. The token isn't used if you want to stake Ethereum, but in terms of capturing some value from the protocol based on increase in TVL and an increase in transactions, the way to get exposure is through the LIDO token, LDO. And this token is the main focus of this thread because that's the token that provides governance for these major votes. So what happens is LIDO's treasury distributes funds to help develop and upgrade the protocol to benefit the users and the stakeholders. But the treasury funds, which are the funds that they use to push through these upgrades and to pave a way forward for the protocol itself, are denominated in 3 assets: LIDO, ETH, and staked ETH. This means the protocol's runway is heavily reliant on asset performance. So in their treasury, they are primarily exposed to ETH. they're not holding USDC, they're not holding DAI, they're not holding stable coins. So in order to pay staff, in order to pay their salaries, in order to pay for development, in order to pay for marketing, it's all coming out of their ETH, staked ETH, and LIDO positions, of which fluctuate based on market conditions. Obviously, this means if you're denominating runway in US dollars, then a drop in the Ethereum price could be quite dangerous for the runway of LIDO, because that means that relative to their costs, they actually have less runway, because LDO and ETH in a hypothetical scenario could be worth less. So this is why the LIDO holders started to get a little bit worried over the last few weeks, because they were saying, look, this could be an extended bear market. If Ethereum hits $500 and we don't have any cash, our runway or our expenses stay the same, but our runway relative to our expenses actually goes down. So we need to do something about this. We need to get more stablecoins. And there was a lot of speculation that based on current spending rates and current costs for the LIDO DAO, that the protocol could face bankruptcy sometime in the future if there's a substantial drop in the treasury's asset value. So let's say Ethereum hitting $500. And in my thread, link in the description, obviously, to my Twitter at Miles Deutscher, I have this image which states the actual calculations for why and at what point LIDO would start to experience some issues. So the market has seen a 4-year bear already. The drop wasn't 2 or 5x, it was 15x. Selling 10,000 ETH would allow to secure 1.5 years of runway. So his proposal was, look, we are looking a little bit shaky if ETH drops sub 1,000. So let's actually just sell 10,000 ETH and let's get ourselves a little bit of runway. The founder, Kobe, most of you guys know Kobe. He co-founded LIDO. He's not directly involved on the team anymore, but he is a major stakeholder, token holder, obviously, and still is in connection with the team to some extent, I'm sure. He said that not selling ETH to USD was an avoidable mistake, and LIDO should have sold ETH to USD gradually when ETH was higher. So Kobe's saying, look, we kind of stuffed up. Why didn't we just sell some ETH when it was 4,000 bucks? Or why didn't we sell when it was 2,000 bucks when we knew the macroeconomic conditions were shaky? We think this was a little bit of a mistake. So the LIDO team, they responded. They said, okay, we acknowledge the concerns regarding runway. Let's actually start a treasury diversification plan, which will try and aim to secure 2 years of operating runway for LIDO DAO in stablecoins. I have a link to the proposal in my Twitter, but the key summary that you need to know is this. It's under the terms. It's that 20 million LIDO, or 2% of the supply, will be sold by the DAO treasury at a price equal to $29 million in DAI. So what they want to do is sell 2% of their treasury, not a very large amount at all by any means, for $30 million. And that would be enough, $30 million to pay for 2 years of runway, considering their yearly expenses are around $14 million. So that would pay for 2 years of runway. But Dragonfly Liquid, and this is where the drama started, Dragonfly, which is a VC, wanted to acquire 1% or 10 million LIDO for $14 million. So what happened was they offered to buy these LIDO tokens for $14 million 2 weeks ago at a 1.5x premium. So if we have a look at when they actually wanted to buy these LIDO tokens, they wanted to buy them for $1.40 per token. If my graph loads here, let's go to let's say the 30 days. They wanted to buy them for $1.40, which was around here. And at the start of July. So yeah, LIDO was around $1. They offered $1.40 or $1.49. I've forgotten the exact amount. And that was roughly a 1.5x premium on the LIDO token itself. So they wanted to purchase for a 1.5x premium, which, to be honest, at the time, a lot of people were very happy with that because LIDO gets to bank a little bit of profit. Dragonfly pays the premium in order to abstain from liquidity issues, because buying it on the open market with an illiquid token is it's not an illiquid token, but it's difficult to purchase massively on the open market. They wanted to pay OTC at a 1.5x. But we all know how strong the Ethereum merge has been, and the Ethereum price exploded. As we can see, this coincides perfectly at the start of July with a massive Ethereum rally from $1,000 all the way to $1,600. A 63% increase in the Ethereum price resulted in a major narrative setting off ahead of the merge. And this narrative obviously affected LIDO, because LIDO is one of the major beneficiaries of the ETH merge, made the LIDO token pump from $1 to $1.70. It made Matic Pump being one of the scaling solutions on Ethereum. And if we look at the Ethereum network as a whole, it's actually holding up quite well compared to the rest of the market. I know a lot of these projects are down. because not all of these are directly Ethereum, but Matic, one of the best performers over the last month. Ethereum, one of the best performers over the last month. LIDO, Uniswap, two of the other best performers over the last month during the relief bouts. So obviously, this resulted in LIDO going to $1.70. Now, what this meant was Dragonfly was now getting the tokens at a discount. So they were trying to get them at $1.40. The price shot up to $1.70, but the proposal was still the same. Meaning, if they sold them to Dragonfly at that amount, Dragonfly would be getting a 20% discount when previously they were paying it a 50% premium. Now, this wouldn't have been an issue if there was a token lockup, but the proposal had no lockup clause. This means Dragonfly will be free to sell the tokens at their discretion. This is an issue because if Dragonfly purchase these tokens below market value, they're now incentivized with a skyrocketing LIDO price to actually start taking some profits on their investment. If they were down from their original purchase, they're incentivized to hold. But if they're instantly up 20% on their original purchase, now they're incentivized to dump their tokens on the market. Now, there was a lot of concerns on the forum. Basically, the LIDO DAO was up in arms over this. You guys could see a few examples of complaints. The dude said should be locked. Adam said the initial entity should have a lock. Erwin Smith said, can you explain what they did to help LIDO? How many tokens are they holding? Why is there no lockup? And then, Yamit also said selling to them at these prices without unlock is literally giving VCs free money. Seems to be prudent to be cautious in a bear market, but not supporting anything without vesting. So what a lock means is that when Dragonfly gets their tokens, their 10 million LIDO tokens, that they wouldn't be able to sell for a year, or they would at least have a cliff so they could only sell a certain amount within the first year or the first 2 years. But the original proposal, one of the options in the proposal was no lock, meaning they just get all their tokens, in one day, and they'd be free to do basically anything they want with it. Now, the community clearly had a lot of issues with this. Even Kobe, the original founder, said this doesn't make much sense. So what LIDO did is they commenced voting with a 1% allocation with 3 options. No proposal. That means my mic keeps dropping. It means the proposal gets cancelled. For keepers listed, which means there's a 1-year lockup. For keepers listed, which means there is no lockup. But despite the no vote dominating in the early stages, because obviously no one really wanted this, so no was by far the most popular vote at the time. Despite that being the dominating vote in the early stages, an anonymous whale stepped in with a huge $15 million LDO vote, which was opting to continue the deal with no lockup. So despite the no vote dominating, a whale just stepped in with a $15 million vote and voted to keep us listed with no lockup, meaning Dragonfly would be able to just dump their tokens. Now, this is a major, major problem. The community was outraged that a unanimous consensus on the forums, which resulted in basically every single LDO token holder being of the opinion that they should have a lockup, despite the unanimous decision, one singular whale was simply allowed to just swoop in and sway the voting. Now, Haskell said this, always the same story. DAO voting outcomes are usually determined before the proposal is even published. All that 15 million LIDO for no lockup came from one wallet. Yet when you read the pre-vote discussion, almost everyone was advocating for some sort of lockup. Theatrics, he said, which it's kind of crazy when you think of it that way, because 99% of people did not want this proposal. And if the proposal went through, they definitely wanted a lockup on Dragonfly's capital. They did not want, in any circumstance, Dragonfly to be able to actually sell those tokens. Now, it gets even juicier. There's another kind of twist that came after, and that's Alex Svanovic, who is the CEO of Nansen. He looked through the Nansen on-chain data, and he saw that the whale was funded by Alameda Research. He said, look, it could have been done OTC with Alameda. He hasn't dug into it. He can't confirm there's anything dodgy going on by any means, but looking at the on-chain data, we could see that it's funded by Alameda Research, which is quite shocking because, obviously SBF has a major vested interest in Alameda. Alameda is a big investor in LIDO. There's questions being asked, if Alameda was backing it, why would they be for Dragonfly receiving these tokens with no lockup? But interestingly, almost like a day later, this whale actually switched their vote from the Dragonfly deal going ahead with 1 year lockup, without a 1 year lockup, to a 1 year lockup. So they changed their vote. They still wanted the proposal to go forward, but they wanted to institute a lockup instead. So they were still voting for the proposal to succeed, but instead with the lock. But the vote was soon trumped because another whale came to the rescue that wasn't the Alameda whale and voted with 17 million LIDO over the 15 million the original whale voted for to cancel the proposal. And the proposal ended with 66% of the votes voting for no. So in the end, the proposal was scrapped with 66% of the voters voting for no, 33 in the end with the original whale, and they are revisiting discussions for a fresh vote on LIDO finance. But why is this an issue? And why am I bringing this up today? Well, I think it degrades the essence of decentralization. It's very similar to the Solend saga that we saw a few weeks ago. If you guys don't know what the Solend saga was, it was basically Solend, a Solana protocol, stepping in, choosing what a whale could and couldn't do with their funds, even though it was supposed to be a DAO, and then essentially having 90% of the votes issued by a single user and $270 million worth of user assets were decided in that vote by one single user because they had 90% of the voting power. And then Solend decided to scrap the proposal themselves and not honor it. So this is a fundamental flaw in the system. Voting powers decided by our DAO holdings, but centralized entities can go in and manipulate the proposals anyway. So I think what this whole LIDO situation does is it really highlights crypto's biggest flaw, in my opinion. And that's that the DAO model and governance models that basically dictate every single DeFi protocol, although they have the intention of decentralization, decentralization is like an ideology. It's not really a reality. Like, we all are striving for decentralization in crypto, but the reality is we're not there yet. And although we love to think we're decentralized, if we actually break it down to its core concept, this market is so highly manipulated by whales that we are many, many years off reaching, if ever, the state that we're fully decentralized and can operate these DAO models effectively. Because if 999 users out of 1,000, for example, could vote on an outcome and were unanimous on a decision, but one singular whale underneath the DAO format can vote against those 999, and if they hold more tokens, they suddenly get to override everyone. I mean, how's that fair? Does that really follow the essence of decentralization? Now, of course, these protocols need these whales or need to incentivize people to hold and buy more tokens so they have more governance power. That's how Curve works. That's how Convex works. That's why they're successful from a price performance perspective. And the team makes more money that way because it incentivizes people to buy more tokens. But it shouldn't be about making money. It shouldn't be about teams making money. It should be about the community making money. And it should be about decentralization. Because that's the entire reason why we're in crypto in the first place. Of course, we're in it to make money. Let's not kid ourselves. Like, we all want to make money in crypto. But we only make money in crypto long term if the technology does what it's supposed to do. And events like this, they just put another strain on decentralization because it's just not what you want to see. You don't want to see whales manipulating these votes. And it happens time and time again. And it's okay when it happens once or twice. But when it starts to happen with massive DAOs that have a massive impact over entire ecosystems, it starts to become a bit of an issue, especially because Ethereum is, and this ETH merge is such a strong narrative. LIDO being one of the biggest beneficiaries, they need runway because they have a very long-term time horizon now. Like, they would believe as a team that they are paving the way forward for years to come in terms of Ethereum staking. And if they believe the merge is successful, like I do, then they'll want to have a vested interest in that for many, many, many years. So in order to do that, they need runway. They cannot survive without runway. So LIDO needs to capture this growth with a long-term solution. They need to find a solution in order to sustain the protocol. I showed on my Twitter the other day, there's the merge, the surge, the verge, the purge, the splurge coming for Ethereum. If you want to check that out on my Twitter. Ethereum has some massive catalysts, some massive narratives coming in the future. And LIDO will be at the forefront of that as Ethereum's second biggest dApp. If LIDO went down, okay, that probably wouldn't affect the Ethereum token as much as it would affect LIDO. If staked ETH was dumped, of course that would have a tangible sentiment knock on Ethereum itself. We don't want to see that as a community. But obviously it does impact LIDO more. There will be another competitor that comes in and offers liquid staking. Liquid staking doesn't go anywhere if LIDO goes down. But it would not be good in terms of Ethereum sentiment. It wouldn't be great for Ethereum holders, although not having a direct correlation. But in terms of LIDO holders, that's not what anyone wants to see. LIDO is a great protocol. We all want to see it succeed. So they need runway. The only way to get runway would be to sell some of their treasury assets, LIDO, ETH, or staked ETH, for US dollars like they were trying to do. The team basically has a decision. It can make a choice now. It could sell some of these assets for stable coins and bank some runway, or it can delay the decision. It can parlay it, wait for a little bit later, and they may be forced to make a decision at that point. So either they act now or they're forced to act later. It's a very philosophical discussion as to what they should do, because there are benefits to everything. But Chuck kind of outlines, he thinks they are between the should and the must, meaning they need to ensure runway, but at the same time, they need to ensure they survive, but at the same time, they need to make sure they're fair. The vote obviously wasn't fair and was obviously highly manipulated, which does spell an issue in terms of decentralization. Let's not kid ourselves. So to summarize, LIDO is starting a new vote soon, a new proposal. Hopefully they can find a runway solution. I'm sure they will. I have faith in the team. In fact, I'm not worried about LIDO because I know they'll be able to raise funds, even if they had to market sell. I mean, one can raise the question, why didn't they market sell earlier? Like, why rely on an OTC? Maybe liquidity constraints is an issue for that. But like a market selling LDO and staked ETH, especially ETH, easily sellable on the open market, a lot of liquidity. They could probably just cash some. Obviously, they wanted to get the Dragonfly deal done first before they sold any of their ETH from the treasury. But I have full faith that LIDO will be around. I think this video summarizes one thing more so than anything else. And it's not to panic in terms of Ethereum. It is to really have a deep consideration into what we want going forward as a community in terms of decentralization. Because everyone says, oh, we want decentralization. But is that actually really possible with these models? Do these DAO models really favor democratic outcomes in these situations? I would argue no. And then going forward, are these governance voting models really the best way to ensure everyone on-chain has a voice and has their say? Right now, we're just seeing too much whale manipulation. I mean, Alameda Research funded a whale, supposedly, allegedly. Obviously, I can't confirm it. That's just what the on-chain data was telling us. When these big companies can just step in and manipulate this market willy-nilly, I mean, it is a bit of an issue. Obviously, we're still in our infancy as a total industry. So it does mean it is a lot harder and more difficult to achieve the ideology we are trying to achieve. Nibor says proof of work doesn't have this problem. I mean, it doesn't have this problem if the network's big enough. If the network's small enough, then it does become exploitable. So I'd argue it has this problem. But you're right. Proof of stake, yeah, but then again, none of these dApps would be possible on proof of work because it's not scalable enough. So, like, can't really have it both ways, but I get your point. Maybe in some cases, voting should simply go as a single peer voting. Well, that's how democracies work. That is how voting in terms of in a government sense would work. And I actually would agree with you, Joby. That could be one solution. It does make the staking side of things more hard. Like, how do you distribute revenue evenly? If some people hold more or less tokens, like, they need to figure out a way to do that and keep governance voting power in terms of decision making and obviously receiving rewards kind of separate. Rich man's game, yeah, totally, Mark. Like, this industry is dominated by the whales. It's dominated by the ultra risk, the ultra rich, and it makes it very, very hard for retail. This isn't an easy game for retail. Of course, in the long run, most of these whales benefit from higher asset prices. So you can kind of play their game by playing the patient long game. But in the short term, they will try and wreck you. They'll do everything they can to get you to panic out of your bags. They'll do everything they can to liquidate you on the trading sense. They'll do everything they can to kind of manipulate that side of things. So, you have to play the rich man's game, because if you accept we live in a rich man's world, that's just the reality of crypto right now. Now, what I want to do is go on to Instagram. I'm actually going to start the live right now and talk through some trades for the day, because I like doing every day after the show. I'm going to trade on Instagram because, like, I could do it live on YouTube, but simply it just takes far too long. So yeah, if you follow me on Insta, I will follow a few of you back just to show some support. There's a link in the description to join, but head over there. We'll talk through some trades. I'll answer any questions you guys have from today's show, and we'll hang out. I'm thinking of doing this every day, basically, after the shows. Yeah. Yesterday, we did quite well off those Insta trades, I'm not going to lie. I can't guarantee it every day because I'm not a professional trader, but we did do extremely well. So I'm just starting my live stream on Insta. There we go. And yeah, okay, I'm live on Instagram right now. Link in the description. I will catch you over there. And I'll also see you tomorrow. We got Travis Scott and Juice WRLD performing. But all right, I'll see you in the next one. Peace out.